Hi traders, welcome once again to the Forex Geek channel. If you've ever wondered why price reacts at certain levels again and again, then you are about to find out. All right, support and resistance are two important concepts in trading. In fact, they are two of the most important concepts in trading, and in this video I'm breaking them down in a way that is simple and easy to understand. So if you are a beginner, then this is the video for you. Okay, before we dive in, hit that like button, subscribe to the channel, and turn on notifications so you never miss a new trading strategy. Now, support and resistance are levels where buying interest or selling interest, as the case may be. For support, it's buying interest. For resistance, it's selling interest. So these are levels where buying or selling interests are strong. All right, basically, they are levels where price reacts based on supply and demand. So let's just break them down individually. Support level is a price level where buying interest is strong enough to prevent price from going lower. Think of it like a floor holding up the market. All right. On the other hand, a resistance is a price level where selling pressure is strong enough to stop the price from going higher. This acts as a ceiling that prevents further movement up. Now, these levels form because of market psychology. All right, they actually form because of market psychology. So when price reaches a support level, traders see it as a buying opportunity. Right? When price reaches a support level, traders see it as a buying opportunity. On the other hand, when price reaches a resistance, sellers step in, creating a reaction. Right? Now, not every price level is important, okay? Not all of them are important. Here's how to spot strong support and resistance zones. First of all, look for historical reaction points. All right? It is necessary. Look for historical reaction points. All right? What I mean by that is if price has bounced off a level multiple times, it's likely a strong support or resistance zone. So watch out for those levels. All right? Next, check higher time frames. Always use higher time frames, okay? Support and resistance levels on the daily or 4-hour charts carry more weight than those on smaller time frames. Also, use round numbers. All right, psychological levels like 1.4, 1.5, 1.6, 1.8, 2.2, 2.0, and all of that, right? They often act as support or resistance. Okay, finally, confirm with volume. You can decide to add your volume indicator to the chart. All right, if trading volume increases around a support or resistance zone, it's a strong indication that the level is significant. All right. Now, the more times price reacts at a level, the stronger it becomes. Okay. Now, support and resistance come in different forms. Let's just go over the main types. We have horizontal support and resistance. These ones that you can see right here on my chart, they are horizontal support and resistance. This is horizontal support, this is horizontal resistance, right? Now, these are fixed price levels where price has reacted multiple times, as you can see. Now, we also have the dynamic support and resistance, all right? Dynamic support and resistance, there are levels that move with price. As you can see, as price was progressing, this dynamic level kept on progressing as well. Examples include your trend lines or moving averages. You can use moving averages to identify dynamic support and resistance zones, okay? And then you can also use Bollinger Bands, all right? Bollinger Band is also a good indicator that you can actually use to identify dynamic support and resistance zones, okay? Using both horizontal and dynamic support and resistance levels can give you stronger trade setups, okay? So take note of that. Now that you understand what support and resistance are, let's just go over how to use them in actual trading. All right. The first step is to identify key levels. So you have to mark the strongest support and resistance zones based on historical price action. All right. The second step is to wait for price action confirmation. Do not enter blindly. Okay, do not enter blindly. Look for reversal patterns like pin bars or engulfing patterns or dojis. Okay, watch out for those patterns. Very, very important. All right. The next step is to set a stop loss correctly. When buying at a support, for example, place a stop loss just below the support. All right, but you can give some pips below it, okay, in case of false breakout or stop hunt. All right, so give some pips below it, not just immediately directly under it. You can just give some pips below the support, okay, to allow the market to breathe. Okay, then if you are in a sell, if you're in a sell trade, selling at a resistance, you can set your stop loss above the resistance zone. Then also don't forget to combine other indicators like your moving averages or Bollinger Bands or volumes indicator or RSI, Fibonacci retracements, and so much other indicators that you can combine, okay, to add to confluence. All right. Then finally, manage your risk. Never risk too much on a single trade. Proper risk management is key, very necessary. All right. By following this process, you make trading decisions based on structure, not emotions. All right. Now, a lot of traders make mistakes when using support and resistance. Here's what to avoid. The first is trading weak levels. Not every level is significant. Not every support or resistance level is significant. Make sure a level has been tested multiple times, okay, before relying on it. Secondly, do not ignore fake breakouts. Sometimes price briefly breaks a level before reversing. So wait for confirmation before entering a trade. It is very necessary. All right. Also, do not force a trade. If a level is not clear, all right, do not trade it. Be patient and wait for high probability setups. Okay. And another mistake is not adjusting to market conditions. Support and resistance work best in ranging markets. All right. They work best in ranging markets, but can be easily broken in strong trends. Okay, you can see now we have a ranging market around here. You can see how the support and resistance zones have been holding. And this is literally the daily time frame. This is the daily time frame. So it means that this level has been, although we had a false breakout around here, but you can see that this level has been holding for over a month, or rather for close to a month now. For close to a month. You can see the dates down here. You can see this 18/12/2024, and you can see this 11/2/2025. Did I just say over a month, or rather close to a month? This is almost 2 months, right? Because this is 18th December 2024 and this is 11th February 2025. So this ranging market has been going on for close to 2 months, although we had a false breakout around here, and you can see how these levels have been holding. But in the case of a strong trending market, you will notice that resistance can easily be broken when you have a trending market. When you have a trending market, resistance can easily be broken, support can easily be broken. So that is the reason why traders prefer trading support and resistance levels in ranging markets. All right. So that is your beginner's guide to support and resistance. Okay. These levels are crucial in trading, and now you have the knowledge to use them effectively. If you found this video helpful, hit that like button and subscribe for more Forex strategies. Also, drop a comment below and let me know, how do you use support and resistance in your trading? I'd love to hear your thoughts. All right. In the meantime, thank you for watching, and I hope to see you in the next video.